Hey everybody, JJ here. Bull boom, bear bust. Weekend edition here of this channel's output. Today we're going to talk about 800 credit scores, how to get an 800 score or higher, and how to keep it there. And I'm not just going to read off what another article had put out there. I'm going to actually show you some things that worked for me personally, and going to go into my own score a little bit and how it got there, and it's actually well above 800. We're going to check it here in a minute. But if you're interested in keeping a good credit score, that way when the opportunity arises to make a purchase such as a mortgage or get a loan of any sort, right? Debt is never fun, but in today's inflationary environment, getting loans sometimes is necessary. Okay, so let's get into it here. We're going to go over to one of my credit cards here. And I'll have to blur out probably my username. Would be a good idea to blur that out. But CitiCard, and you might know credit cards now, a lot of them offer credit monitoring and also free credit scores as part of the card. So this is CitiCard. So let's take a look here. I believe this is one that has the credit FICO score available. We're going to log in here. Oh, that didn't work. I thought I had my password saved. Hang on 1 minute, please. There we go. Okay, so as you see, a zero balance, and we're going to talk about why I have it at a zero balance. It's going to be part of the topic today in the discussion. And let's go ahead and click FICO score right here. Web is slow today. Okay, supposed to have a FICO score in here. Let me take a look, see what's going on. Sorry about this. You saw it. It said FICO score, so it's got to be here. Okay. Guess it's going to hide it and it wants us to click around a little bit. Let's see here. There we go. Okay, so 817 is my score, and it was updated September 24th. We're almost to the next point here. Looks like they'll update it probably in a few days, but you get the point. It's pretty good, not bad. Now, I've seen it in the 820s before, so I guess it went down a little bit, and you'll see the credit scores fluctuate from time to time. All right, now first of all, I just want to give my opinion on the entire credit scoring system and how it changes and how the ratings are kind of, in my opinion, they're flawed, right? So, for example, people with less debt can have a worse credit score than people that have more debt, and that's, to me, that's completely backwards, but the point of the credit bureaus is you're supposed to have an established payment history. So if you're somebody that's never had a loan or never had a credit card, even though you might be in your 40s, 50s, or 60s, you're going to be looked at as a bigger risk to lending institutions, and therefore the credit bureaus take that into consideration. So believe it or not, you could have $1 million in the bank, pay cash for everything, never need a credit card, never need a mortgage, never need a car loan, and so forth. And you might have a worse credit score than someone that has $50,000 in credit card debt. Right? Completely backwards when you first look at it, but when you look at the lender's analysis of the risk, you might be able to get an understanding on it. You may not agree with it, but you might get an understanding from a lender's point of view. All right, so it took me a while to kind of wrap my head around that. I was kind of like, well, if you don't have debt, why is your credit score bad? But I'll give you an example. My father doesn't have any debt, zero debt, house paid off, doesn't use credit cards, right? Carries around cash, has a lower credit score than mine. He's in the 700s, right? Still pretty good, but I have debt. I have a mortgage. But we're going to talk about debt and how you should manage it to keep a good credit score, so 800 and keep it above 800. And some things are obvious, but I'm just going to list out the more obvious ones first. So I've got a little bit of a checklist here, just a brief checklist. No late payments or over the limit balance history, right? So that seems pretty basic and logical, of course, but we're going to talk about how to avoid having late payments. Of course, you want to make your payments on time. It's pretty simple, but what I do is I set up all my credit cards automatic payment to pay in full five days before the due date. And why 5 days? Because that gives it at least 2 business days. So if there's ever a weekend that's a non-banking day or business day, or if there's ever a holiday on a Monday, like you see a lot of times with Labor Day and things like that, you're going to give it 5 full calendar days, which is always going to be at least 2 business days. so they can't say that your payment's late. So I always put mine in automatic payment so I don't forget. Full payment 5 days before the due date. Okay, also something I want to add to this, I set up payments right within the credit card account. Now, if you're setting up a bill pay through your bank, for example, your checking account, to pay a credit card through a bill pay service that your bank may offer, you might want to even allot more than 5 days, because some of these bill pay services can be a little bit slower, so you might want to look at up to 10 days, just what I would do in that situation if you're using a third-party bill pay system. And that's going to help you never have a late payment. Now, not everybody can pay their credit cards in full. I've been blessed or lucky or fortunate enough, whatever you want to call it, to be in this position. And as most of you might know, I do work quite a lot. I have a full-time job. I have a rental property now that I have to manage. And I don't pay a property manager. I don't like the property manager fee, so my life is quite busy. But it does allow me enough income to pay off all my credit cards in full each month, thank goodness. And that's with the family here in California, and I have 3 kids. And it's not easy, I'll be honest. I had to sell an investment property to pay off some medical debt, and I don't like carrying debt. And I was in a kind of a back and forth on what to pay off, the medical debt or try to pay off the mortgage or pay down the mortgage. I chose to pay the medical debt because I didn't want to risk having to get a high interest rate on the medical debt or put that on a credit card. And we know that mortgages are fixed, so I chose to keep the mortgage debt and get rid of the other debt, the medical debt. Okay, brief story behind that. I've got a special needs kid who's got a basically very rare internal inflammatory digestive disease. Not to throw a pity party, but it's very time consuming. We have to buy a lot of very expensive supplements and medications, and a lot of these supplements that we get are not covered through insurance. Right, so we're talking sometimes hundreds of dollars a month just in supplements and medications. Even after co-pays, yeah. So it's pretty crazy. But, that's my life. And just to give you the story behind the medical debt situation, a lot of people are asking, why did you sell your rental property? It's passive income. Well, one, I don't expect home prices to go up too much more. It's possible with the way the Fed's been acting. But two, rental properties that are condominiums here in California come with an HOA fee just about always. And my HOA was a nightmare. If you've been on this channel, you've probably seen my HOA nightmare videos. So I chose to cash out at a very good time in my opinion as far as what prices are right now. And 2, get rid of the HOA nightmare and just the maintenance and the upkeep. And 3, pay off that debt. So it was a multi-factored, multi-tiered decision in order to get rid of that property. Still have another rental property. And of course my primary residence, as you probably know, still have a mortgage on this. So I'm not out of the woods. I'm still struggling. California's expensive. Again, I appreciate everybody helping me out on the channel. But let's get back to the credit scoring information here. I admit I do digress a lot when I'm talking here, so again, thanks for staying with me here. Next thing here is keep your balances below 30% of the credit limit, and that's going to be best for your credit score. Again, that's not always possible depending on your situation. All right, but I want you to look at this 30%, and it's not only the total. So if you have a total of $50,000 available credit and you have a $30,000 balance, that's going to be looked at as very negative, and you're going to have a difficult time getting an 800 or higher credit score with that. Also, I try not to have very many cards with balances, right? So even though I pay off my card in full each month, it's just one card that we put all of our expenses on. And I know that some people like to have different cards for different expenses. That way it's better for bookkeeping and tax record purposes. But for simplicity and to lessen the risk of having a late payment, I choose to just use one card, pay it off. And that way I'm not worried about making multiple payments each month. And with just one payment to have to be made, you're less likely to have a late fee because it's just one payment, right? Less to go wrong, less to try to remember, again, unless you have auto pay, which may take all of the memory work out of it, so to speak. Right, but also the other aspect of it that I want to put out there is if you have multiple cards that you use, it also opens up the risk of getting your identity taken, your card information compromised, and so forth. So you also lessen your risk of that happening the less cards that you use. Of course, even a card or account that you don't use can still get, the numbers can get taken somehow, but it does lessen the risk if you're not using all these different cards at different places, if you know what I mean. And that was the bullet point I meant to have up there. So avoid having multiple credit cards with balances. Sometimes it's not possible, of course, and as I mentioned, it's good to have different cards in different places for different uses for record keeping. Okay, so next, pay off cards in full each month. As I mentioned, 5 days or at least 10 days before the due date. if you're on third-party bill pay. But to make it the best, you want to find out what the reporting date is where the card reports that to the credit bureaus, right? So each account that you have, they usually are going to report at least once a month, sometimes not always, but usually once a month to the credit bureaus, and there's 3 different credit bureaus. And that's a whole nother topic. Each credit bureau is probably going to have a different credit score because they all have a little bit of a different criteria that they weigh into the scoring process. I believe the credit card that I use uses Experian. So that's one of the 3. You have Experian, Equifax, and TransUnion. But for example, if you pay the card off after it gets reported, the credit bureaus may see you with a balance each month even though you're paying it off in full. And again, that's because you're paying it in full after it's already been reported to the credit bureau. So if you find that reporting date, take that into consideration, as well as, of course, the due date, and that'll give you the maximum credit score. So you could be paying it in full each month and still not have an 800 credit score because of that. Okay, so what's next here? Set up auto pay, talked about that earlier. Okay, another here, have different types of credit and loans established. So, okay, here's one that I had to wrap my head around also. Have different types of credit. So different lines of business or different lines of, let's say, different types of loans. Okay, so credit cards, auto loans, mortgage, even store cards. Having a diverse payment history or diverse accounts in good standing helps. And sometimes it's even worth it to, for example, buying a vehicle, get a loan, and then just pay it off after a couple months, as long as there's no prepayment penalties, just to establish that paid history with an auto line. So some people, even though they have cash, they choose to just get it financed to help their credit. And sometimes you get a little bit of a kickback from the dealer if you get financing. Okay, we know how the dealer loves to get people into loans because the salesman typically probably get a kickback, also get a bonus. Okay, so there's my top tips. I hope you learned something, or maybe something you knew and forgot about. Maybe it was just a refresher, but I'd like to hear from you down in comments. What are your thoughts on this? Let us know any tips. So if you're reading this, maybe look down in comments also. If you're listening to this, maybe look down in comments also for some other tips, because there's always things that I miss. Right? I try to keep these videos kind of short, 10 or 12 minutes at the most. And let me know what you think about the whole credit rating system. I think it's kind of a scam, but we're all kind of stuck in the matrix, and people that just use cash typically have a harder time getting loans if they do need them. Right? So it's kind of a trap in my opinion. But what do you think about that? What do you think about the whole system and other tips here that I may have missed on keeping that credit score higher? But anyways, if you got something out of this video, if you enjoyed it, please give us a thumbs up and share and subscribe if you haven't already. And who knows, maybe if I get a large enough channel here, get more viewers and views, I'll be able to quit my day job, but I kind of doubt it with these medical bills. All right, everybody, thanks again. Bye now.